for our friends out east, and about 3:35 in the afternoon out west, where I am in Vancouver. Why don't we go ahead and get started? Again, I appreciate you guys showing up and showing up on time. We have an exciting webinar for you today or this evening, wherever you are, specifically around why choose ShariaPortfolio Canada as your wealth management solution, specifically regarding some great news that we have regarding our management fees and financial planning, which we'll be touching upon in this webinar. Just as a quick disclaimer, nothing said here is meant to be taken as financial advice. This is strictly for educational purposes only. If you do have questions or concerns, please leave them in the Q&A box right on the bottom of your screen there, and we'll be glad to get to them near the end of the webinar. Of course, if you have some more personal questions regarding your specific situation, we'd recommend, touching base with your financial advisor or your tax specialist. If you do not have a financial advisor, or you're thinking about switching, we'd love to have a more personal conversation with you individually. And we will be sharing our contact information, of course, during this webinar and near the end as well. Just as a quick introduction, my name is Ali Ladak. I'm a financial advisor with ShariaPortfolio Canada. I'm based out of Vancouver, Canada. A little bit of a background: I graduated from Wilmington University with a degree in business management, and I serve as a financial advisor where I educate and assist clients with navigating and enhancing their financial situations. I'm joined by my colleague, Zishan Jan Mohammed here. Zishan is one of our associate portfolio managers here at ShariaPortfolio Canada. He spent most of his career in the capital markets and wealth management space, supporting both institutional and retail clients. And he joined ShariaPortfolio Canada after spending a couple of years at RBC Dominion Securities, or RBCDS, that is. I'll let my colleague Zishan here take over.
I'll just give you a quick overview of what we will be discussing today. So we'll start off with Ali discussing a little bit about our fee structure and how we actually differ from the other wealth management firms that are at your disposal. After which we'll dive a little bit into a service that we are offering our active clients, which is the financial planning service. So we'll go through that in a little bit more detail. And then Ali will share with you a little bit more information about how we actually maintain Sharia compliance within our portfolios and how we adhere to Islamic values in general with regards to our investment management process. After that, we'll discuss a little bit about our investment philosophy and how we work things with regards to the process involved from beginning to end. And then we'll open the floor to questions if you do have any.
Thank you, Zishan. And of course, if you do have any questions throughout the webinar, just drop them in the Q&A box and we'll be happy to address them. So jumping right in, understanding our fees, starting with some great news. Our clients at ShariaPortfolio Canada can say goodbye to their transaction fees. In the past, clients were charged a transaction fee on purchases and sales of stocks or securities, and that is no more. So, alhamdulillah, that's a great initiative that, will inshallah even help further gains even more. I'll dive into, our services and, what fees look like in those. And of course, how do we compare to, other institutions and other, financial products that are out there? So to give you a breakdown of our programs offered at ShariaPortfolio, we have two core programs, a passive and an active program. Starting with our passive, this is an economic solution for investors looking to get into the markets. It's for any account size, and this is strictly ETF-based, exchange-traded fund-based. And again, if you have questions about that, we can dive more into what those ETFs look like. But the fee for this service specifically is 0.5% annually. And again, this is more of a buy and hold solution for investors not looking for, excessive trading or, just more of a buy and hold solution. And again, this can be any account size starting from $1,000 to, anything. our core service or our main service at ShariaPortfolio Canada is our active program. And this minimum is $100,000. And this is more of a personalized solution and a personalized portfolio for individuals that focuses on individual stocks along with some ETFs that Zishan will touch upon during our investment philosophy talk. And also, like focused on tactical maneuvering within, timing of the markets, tax loss harvesting, and mainly preferable for those wanting to maximize long-term returns with tax efficiency in the markets. And of course, as Zishan mentioned in the beginning, some exciting news. We're now offering, comprehensive retirement and financial planning to these active clients. And the fees, these typically start at 1.5% annually and decrease on a sliding scale based on the amount of assets that you bring in. So again, our passive program is for any account size starting at $1,000 at 0.5% annually. And our active program is, the minimum is 100,000. Again, focus more on personalization and individual stocks. And that ranges from 0.5% and down based on the level of assets. So this is just a picture of our brochure here that gives a little bit more of a breakdown of what these active and passive strategies look like. Again, I won't dive too deep into that. But the main thing is, as a registered firm in Canada or in the provinces of BC, Alberta, Ontario, and Quebec, we are able to offer all types of registered and non-registered accounts, or Canadian accounts, to our clients. And that includes, of course, a non-registered account, along with TFSAs, RSPs, locked-in retirement accounts, RIFs, our ESPs for education, FHSAs, the first home savings account, which is new from last year, and of course corporate accounts as well, all registered in Canada. And our portfolio models range from sukuk and conservative all the way to aggressive, and really kind of emphasizing that there's no one size fits all for any client, right? We really want to get in depth about your goals and not only your financial goals, but also your financial restraints and risk profile to understand where you might fit on that spectrum to ensure the investment strategy proposed to you is the right one. So what are some other fees to be aware of? Specifically at ShariaPortfolio Canada, there are no internal transfer fees. There's no Canadian withdrawal fees. Wiring fees, oftentimes some clients want to, withdraw either a different currency, like for likely USD. This varies based on the institution and where that money might be going. So that would be more of a personal conversation just to get a better understanding of what that might look like. We do not take any commissions on profit. Again, we have a structured fee that ranges from 1.5% to 0.5% based on the service that you're in, and that's annually. There's no commission on profit. There's no front-end fees to sign up or anything like that. The big thing is MER, which I'll touch upon more in depth as well. MER is a management expense ratio that's paid when you hold funds such as ETFs or mutual funds. In our portfolios, we do hold ETFs from SP funds. That's typically averages around 0.5% in those ETFs. If you want specific numbers, you can visit sp-funds.com to get into the specifics. And all our accounts are held with Fidelity Clearing Canada, who is our custodian broker. So how do we compare? So I know, there are many wealth management firms out there that offer, different financial products. When it comes to the specific services that we offer and how that compares to, other firms that may offer something similar, typically other firms range from 0.5% to 2% overall, making us extremely competitive and, oftentimes lower than, what might be the market. But it's really important to check for other fees that such firms might be offering, like I mentioned in the previous slide, either internal admin fees, trailing costs, front-end fees, transfer fees, etc. asking questions is your number one friend when talking to advisors or, representatives from anywhere, including ourselves, right? And getting into mutual funds, these typically, I'll expand on this a little bit in the coming slide. But typically these mutual funds have advisory fees. Sometimes they don't, so that's why it kind of ranges from 0% to 2%. But the big thing is, I don't want to say hidden fees, but other fees that they have, such as sales charges, front-end fees, back-end fees, and MERs, like I mentioned before, which I'll touch upon. And then, of course, with interest rates the way they've been the past couple of years, GICs are very popular. And we'll compare, our fees and our structures compared to that. Of course, GICs are riba-based, and we do not invest in interest-bearing securities. So we'll touch upon that as well. So how do we compare to mutual funds? This is a big one. So as many of you know, mutual funds are made up of a pool of investors' funds that are then managed internally and priced at a fund unit price. These differ from ETFs or exchange-traded funds as they are more actively managed and they are not traded on public markets like that you can buy publicly, such as ETFs or on a public exchange. But oftentimes that can lead to higher fees. So what do you need to be aware of with mutual funds? So front-end fees. So some mutual funds charge a fee upon purchase of units, and this can range from up to 5%. This is oftentimes something that again clients do not see, but it's just something that's paid to by the fund to the fund. Other fees include switch fees or short-term trading fees and redemption fees. This is if you're changing mutual funds or if there's other trading going, like specific trading going on within the fund, and redemption fees if you're withdrawing either early or at a certain period of time, those fees can occur as well. So again, switching fees between funds or withdrawing within a short period of time can incur additional fees. Early redemption fees or deferred sales charges, are really key. And deferred sales charges are fees upon withdrawals at certain points of time. But and this is applicable before June 1st, 2022, because this is something that was taken away by the Securities Commission. So touching upon the management expense ratio, or the MER, like I mentioned a couple of slides ago. Typically with mutual funds, these MERs can be a lot higher than maybe other funds such as an ETF, right? And oftentimes these range from 1% to 3%. And this is a fee that clients do not see, or clients often cannot see, because they're paid within the fund to the fund, right? So it's really important to be aware of what you're paying and making sure that you know what's going on, because the key thing here is transparency. And unfortunately, sometimes, for clients, they may be drawn to a smaller advisory fee that mutual funds may have, but not realizing the management expense ratio that's within the fund can turn out to be a lot higher than perhaps investing with a different wealth management firm that doesn't incur such fees. So next is GICs. So how do we compare to GICs? Again, these are something that's really popular given interest rates kind of skyrocketing the past couple of years. Right off the bat, GICs are riba-based. We do not invest in GICs, but of course it's important to be aware of what products are out there, right? Other than the riba, GICs often do have locked-in periods. I can't speak for all of them. Some do. I've seen some that don't as well. But having your money tied down to a certain timeline, could cause some stressors. If you do, say something happens or an emergency happens, and you do need those funds, you will incur a penalty if you are in a lock-in period. And just a note, as a client of ShariaPortfolio, your funds are fully liquid and invested in public markets such as individual stocks and ETFs. So there's no lock-in or anything like that. Your funds are completely liquid. If you need to withdraw, the funds will be withdrawn, right? The biggest thing with GICs is probably the tax. So because GICs are interest-based, interest itself is taxed as income. So that means all profits are taxed, right? Whereas investments in the stock market or individual stocks and ETFs are taxed as capital gains, which is 50% of the gains are taxed. That has changed now, which I'll note as over two now as of 2 weeks ago or maybe last week, over $250,000 in gains is now taxed at a higher capital gains tax. So just as an example, say Sakina has $400,000 sitting in cash and wants to invest it somewhere. Her marginal tax rate is 26%, and she decides to put $200,000 into a GIC for 1 year at 4% interest. And with the other 200,000, she invests with an advisor in a non-registered account in the public markets, such as stocks and ETFs, and the markets went up 10%. I give that example because GICs are obviously bearing on the interest rates, on the amount that, on your returns, whereas, in the other markets or in the stock market specifically, there is potential for higher gains than, say, whatever the interest rate is at the time. But how much does she save after tax, right? So with the GIC, $200,000 at 4%, she'll get $8,000 in gains, and calculating the tax on that, she'll be paying roughly $2,000 in tax, resulting in about just under $6,000 in gains after tax. And again, there's no management fee included here. That's something to keep in mind as well. But how does that compare to potentially investing in the stock market where the market goes up 10%? So going up 10% on $200,000, you'll get $20,000 in gains. And the important thing here again is the tax. The capital gains tax is only on 50% of that 20,000, right? So on $20,000 of gains, Sakina would be paying roughly $2,600 in tax. And just again a note that capital gains tax has changed and increased for gains upwards of $250,000. And again, management fee is not included here as well. But the end result will be $17,000 and $17,400 in gains. So again, tax and the potential for growth is really where the key difference is in GICs. And I know GICs are obviously guaranteed, and in the markets, of course, with stocks and ETFs, you are subject to market risk. But I'll let Zishan comment on perhaps an alternative as well.
Yeah, thank you, Ali. I mean, that's very well explained. What I just wanted to touch on a little bit is with regards to how GIC is, of course, an interest-based investment. What are the alternatives when you're looking at the Sharia compliance side, right? Most of you may know that we have a Sukuk fund, but the Sukuk fund is a combination of many Sukuks within it, right? It's a portfolio. But in today's kind of market where interest rates are higher and the yield that you can achieve on a GIC is pretty good, it's important to look at what the alternative is instead of a GIC. Now, a lot of individuals look at GICs because of the safety of principle that's offered with it, right? And a lot of the times you look at a GIC, let's say that's issued by a bank in Canada. Generally, the banks in Canada generally are AA rated. Now, what that means is that the rating agency gives that credit issuer a rating, which is very healthy, meaning what's the chance that that company that's actually issuing you that GIC goes bankrupt tomorrow, right? Meaning if they go bankrupt, they can't pay you back for the GIC. The alternative to GICs are Sukuks, which also offer an annual stream of income, which is a yield, which is very healthy as well. And sometimes they range between 4 to 6%. But on top of that, the safety of principal is also achieved because a lot of the issuers that offer these Sukuks are investment grade, which are high quality credit issuers with a lower chance of default, similar to how the banks have a lower chance of default in Canada. So this gives you access to being able to invest in a Sukuk, which is a Sharia compliant fixed income asset class, allowing you to take the opportunity to achieve an annual stream of income, plus ensure that you have some safety of principal within your portfolio. The other great benefit of this is the tax implications, because when it comes to Sukuk, not only are you actually getting the yield as an annual stream of income, but you also get a benefit of capital gains. Now, we will most likely try to hold a webinar in the near future explaining sukuks and how they work and how you can actually have access to them on an individual basis. But the minimum to invest in a specific sukuk on your own would be at least $1 million. But that doesn't mean that clients who don't have $1 million cannot have access to sukuk. So if you do want to learn a little bit more about sukuks and how they're actually a great alternative, not only with regards to the type of asset, but also the tax implications compared to a GIC, do get in touch with us and we can definitely set up some time to discuss that with you on an individual basis. With that, Ali, I'll just move on to the financial planning session, yeah? So with regards to the new offering that we have, which is financial planning, let's kind of go through this a little bit in detail. When you're looking at portfolio management, investment management, how much returns you're making, it's important to note that portfolio management and the investment management of your portfolio is one part of financial planning. Financial planning is like the umbrella, right? Your returns, your portfolio is just a means towards reaching the end goal. So when it comes to financial planning, it's more about understanding your retirement goals. It's a full holistic assessment of where you are financially, where you want to be, what's in between, right? How much retirement income are you going to be earning? Planning for estate and tax implications. Because as you know, that saying, failing to plan is planning to fail. So financial planning is the most important part of your journey, because that's what will keep you on track to actually achieving your goals. Now, how do you actually understand your retirement goals? As I mentioned, it's just one part of the entire bigger picture, right? So what we do with you as our clients is we try to understand in depth what your short-term, medium, long-term goals are, right? Where you are today, where you want to be, what needs to happen in between, what can you do during that time in between, and after you retire, what happens then? How do we actually accomplish this, right? What age are you planning to retire? Are you planning to retire at 65? Will you be able to retire at 65? If you can't retire at 65, what age can you actually retire at, right? It's our job as your wealth management firm or your advisors to actually help you along this journey and tell you what needs to be done, because you may want to retire at 65. We'll work with you to see how we can reach that and whether it is even possible or not. That's kind of the gist of financial planning, because you need to plan now so that you can live the life you want after you actually do retire. So one of the aspects of this is also going through in detail with regards to your financial assets. What liabilities do you have today, right? What are the different streams of income that you foresee yourself having once you do retire? What are the streams of income you have today? How much are you saving? Are you going to have pension? Do you have any real estate? So we go through an in-depth assessment of not only your financial and assets portfolio, but also your liabilities, your budget, how much you're currently spending, how much you plan to spend after retirement, and that all ties into your financial plan. Now, when you go to sleep at night, sometimes you may be thinking about, will I actually be able to retire? How will I actually retire? Right? And it can be a bit daunting sometimes. It can be a bit scary. So when you have a financial plan, not only do you actually have a structure as to where you're heading and where you are right now, but it also gives you that peace of mind, right? You want to know, when I do retire, where will my income be coming from? Right now, your mind may be all over the place with regards to your entire financial status in general, right? And that's where we come in to help you. So the financial plan is like your go-to blueprint. And on an annual basis, it's important for you to work with your advisor to make sure this financial plan is updated on an annual basis, because life changes, right? Things happen in life. Your goals may change. Your situation may change. The amount of assets you have may change. It may decrease, it may increase. You may buy a new property. You may sell a property, right? A lot of things actually impact the financial plan more than people actually think it does. Just to give you a quick example, let's say someone's perfectly fine to retire, right? They have enough assets and they're good to retire. Considering an inflation rate of 2%, it looks like they're going to be completely fine in retirement. But the minute you change that 2% to 3% of inflation, you might actually not be able to retire. You might actually live longer than your assets and your cash may last you, right? And a financial plan helps you understand that. We go through that sensitivity analysis with you. We look at different scenarios. If inflation is 3%, if it's 4%, if it stays at 2, how do things change for you, right? So it's important to look at all of these aspects when you're going through a financial plan. And part of the financial plan is also looking at your estate and tax situation, right? So we try to help you to the best of our ability, minimize any tax implications and ensuring that you have a proper estate plan in place. Because God forbid you do pass away tomorrow. Is your family taken care of the way you want them to be taken care of? Will you be writing a huge check to the CRA for half the amount of your assets that you're leaving behind? Right? There's a lot of things that come into place. Do you have a corporation? How do you actually plan to transfer the wealth from your corporation to whomever that you want to transfer it to? Your children, your beneficiaries, your family. How do you do this in the most tax efficient way? Are you structured correctly right now? Do you have a will? Do you have a corporate will? Right? We help you go through this process so you don't have to do it alone. And we help you try and maximize the amount of wealth that you keep within the family or within whatever it is that you're trying to achieve, right? It might be trying to maximize the amount of funds that you actually put into charity. Whatever it is, we work with you to ensure that we can maximize your potential with regards to your estate plan and minimizing the amount of taxes that you would owe. Now, that kind of gives you the gist of why a financial plan is important and what it includes. So when you work with us, we'll actually provide you with a well-documented financial plan that you can keep with you and file with you, right? It's your go-to. You kind of forget anything that's going on in your life, you want to see where you're actually going to be, dive right into that financial plan. Look at it. You'll know where you're going to be in 20 years. You'll know where you're going to be in 30 years. You'll know where you're going to be in 5 years, right? You need to make changes. Things are changing in your life. Have that meeting with your advisor, right? Make those changes to the financial plan. Is there a big decision that you're going to make? Sure, have a meeting with your advisor, see how that decision would actually impact your financial plan in the long run, right? Your financial plan, like I mentioned, is your blueprint to your financial life, right? And it's adaptable, meaning things change and your financial plan will also be changing. So it's something that you do review on an annual basis. And just to give you a quick example, right? Once you go through a financial planning session or you have that financial, what does it actually look like? So we've just kind of taken just a little tidbit of the entire financial plan to show you, just to not overwhelm you too much. But in general, you'll have an option to see where you are. Like this is like a snapshot of your financial summary. So you have, let's say, yourself and your spouse, right? What returns are you actually expecting in your portfolio? What assets do you have? What liabilities do you have? What's your net worth today, right? This is like a snapshot of where you are today, what you're invested in, what your expected returns are, how it all kind of ties into place. And then if you go to the next slide, you'll see that you have a long-term horizon view of what your financial assets look like from today up until the time that you pass away, right? And everything in this financial plan is customizable to fit each individual client to what you actually need. Remember, every client has a different situation in life, different goals, different family structure, different wealth structure, different plans. So this is fully customized and tailored to what you need. So for example, this page shows you, okay, today you're sitting at about a net worth of $1.7 million. How does this pan out for the next 40, 50 years? Right? When you're 75, your net worth is about 6 million. What does this 6 million comprise of? Right? You have your cash investments, your insurance, let's say if you do have any corporate fixed assets, your real estate, your cash, your retirement, RSPs, TFSAs, everything. Right? It gives you a very good snapshot of where you are and how this is forecasting into the future. And then you look at the next page. Now, this is about cash flow. Okay, so I want to retire when I'm 60. Now, when I'm 60, I'm not going to be working anymore. And I actually need $150,000 in income every year, adjusted for inflation, of course, right? So I need $150,000. Will I be able to get that? Well, according to this graph for this couple, yeah, they are reaching $150,000 in the cash they require, and that is made up of several things. For example, you're getting government benefits. We help you calculate how much you're going to be getting in your benefits. You have a pension that you're going to be earning from. And then you have your investment portfolio, which will derive some income for you, right? You have some corporate investments, some assets, whatever it is, comes into this cash flow table showing you, okay, this is my requirement for cash. This is actually how much I will be getting. Now, this couple looks like they're in good hands, but you may not be in good hands, right? You may actually be requiring $150,000 when you retire, but based on your current situation and our forecasting, you may actually only be able to get $100,000. What do you do for the next 50,000? How do you actually make sure that you can retire in a way where you have that $50,000 available to you because you need that when you retire, right? So those steps need to be taken now. You have to plan from now to be able to do that, right? So that you can retire in peace. So we go through that retirement analysis with you. And there's different things that you could do to make sure you reach your goals. If your plan is actually saying that no, you won't be able to reach your goals, you maybe change your lifestyle. Maybe when you retire, if you lower your expenses, instead of spending 150, you actually manage to spend 100,000 on an annual basis. Yeah, you should be okay, maybe, right? So one of the options is change your lifestyle. One is maybe it'll mean changing your retirement age. Maybe instead of retiring at 60, you might need to retire at 65, right? For someone who's actually doing really well and their plan is everything is in place, they may actually be able to retire a lot earlier than they think they can, right? You may need to adjust the portfolio you're in. Maybe being in a conservative portfolio is not going to help you achieve your retirement goals. So you may actually need to build the appetite and take higher risk in your portfolio. Or take lower risk if you don't need to take that high of a risk, right? It might mean you need to change how you're actually allocating your capital today with regards to planning and achieving your goals when you retire. So we go through all of this in detail with you with regards to your financial plan. Now, like I said, this is the most important part of your financial journey. So it is very important for you to have a financial plan. And this is something we are offering our clients. It's not an additional cost to you, right? Once you are an active client of ours, this is something that we offer to you. It's part of our entire whole service. And it's important for our clients to take advantage of this. So I hope that does kind of give you a view of what this is all about. I'm sure you have questions, and if you do, feel free to just put them into that question and answer box, and we'll be happy to answer them at the end of the presentation. With that, I'll leave it to Ali to go through the Sharia compliance aspect.
Sorry, I was just on mute there. Thank you, Zishan, for going through all that, and that's a really exciting initiative and service that again that we are now offering. So if that is something that you're interested in, please do not hesitate to reach out. Again, it does not come at an extra cost. This is part of our service to you. So diving into what else makes us different, and Sharia compliance is a part of that. I know we touch upon this pretty much in every webinar. I'm sure I see many names, familiar names here that have been there before, and I'll go through it quickly and just kind of place an emphasis on the importance of to us, it's more than just business, right? This is we're a Muslim-owned and operated business that you'd be working with. So the Sharia compliance is not just part of us; that's our business. We are a fully licensed portfolio management firm that's 100% dedicated to Sharia compliant investing. It's not just a part of our business, it's all of it. So diving in quickly, so how do we remain Sharia compliant? So we follow the AOFI board, which is the Accounting and Auditing Organization for Islamic Financial Institutions. They're a board of scholars based in Bahrain, but spread out around the world. And they set out the set of standards of what makes a company Sharia compliant or not, right? So getting a little bit deeper into that, of course, we have the basics of non-compliant income sources. So we don't invest in any gambling, alcohol, pork products, weaponry, highly leveraged businesses, tobacco products, adult entertainment, music, cinema, broadcasting, and more. But these are the basics that we all know. And the guidelines of what securities that we actually invest in. So, Sharia compliant securities consist of only stocks, sukuks, Sharia compliant mutual funds, and Islamic ETFs. At ShariaPortfolio Canada, again, we only invest in stocks and ETFs specifically, and preferred shares and derivatives are considered to be non-compliant. And a couple of financial ratios, that we follow. So interest-bearing debt over a 12-month average market cap should be less than 30% for the company. Cash and cash equivalents and receivables over assets should be less than 30%. And cumulative revenue from non-compliant activities or non-operating interest income should not exceed 5% of the total income as well. And if you do have questions about how these are actually screened and what that might look like, we'd be happy to help. Most importantly, we go beyond just a halal screen. And again, like I mentioned just a couple of slides ago, we are Canada's only licensed portfolio management firm that is fully dedicated to halal investing. We know that there are products out there that preach the same service, but we are fully dedicated to Sharia compliant investing. It's not just a part of our business. And that's why working with ShariaPortfolio Canada means that you are working with a Muslim-owned and operated business with the same values that you carry on a daily basis. And, specifically now, of course, there's screening the stocks and making sure that the portfolio itself is, compliant, right? But on top of that, of course, dealing with any wealth management firm or whatever financial product, you are paying a fee to that firm, right? There's no hiding that, right? So I always ask, on top of investing in Sharia compliant screens or whatever it is, where are those fees that you are paid going, right? And again, we're a completely Muslim-owned and operated business with the same values that you carry on a daily basis. So with that, I will pass it back to Zishan to talk about our investment philosophy and how that differs from, perhaps other products that are out there.
Thanks, Ali. I do see a question here that we've received with regards to how do you actually define Sharia compliant stocks? And I hope you got the answer from what Ali described very well with regards to how we actually screen for the Sharia compliance. And then you do have a further question with regards to, do we look into specific ratios, business loans, interest-based transactions? And I'll get into that with regards to how we actually look for companies and the investment philosophy, right? But I do have, like, this screen that Ali's showing you right now is kind of the gist of thresholds that are set by the AOFI board with regards to the financial ratios that we look into before deeming a company compliant or non-compliant with regards to potentially investing in that company, right, into one of our models. So yeah, we do definitely look at the debt ratios, right, which as you can see here, like the interest-bearing debt of that company shouldn't be more than 30% of the market cap of the company. Now, for those who may not be aware of this, market cap is basically the entire value of the company, right? And we look at the same thing with regards to cash, because if a company is holding too much cash, there's a high chance they're earning a lot of interest on that cash, right? And that becomes a revenue stream for them. So we also need to make sure that the revenue and income of a company, no more than 5% of that actually comes from non-compliant sources. Now, to talk a little bit about our investment philosophy. So with regards to what we actually have in your portfolio, right? There's three things. The first is, of course, Sharia compliance. So we've spoken about that. We need to make sure that what's in your portfolio is indeed Sharia compliant. Then we look at the company analysis, the quality of the company, owning good, strong businesses. We'll get into that. And then there's, of course, the additional screen that we do try to apply to the best of our ability, and that is to make sure that the companies that we hold in our portfolio meet the discretionary parameters that we put in place. And that is with regards to the need to being socially responsible when investing in companies and taking into consideration the geopolitical landscape that we're in, right? And we take that into consideration to know that we're actually holding companies or businesses that are actually doing good for society and as much as possible are not a negative impact to our global climate, right? So that is another screen that we do add to make sure that we are considering the current geopolitical landscape that we're in. And we're trying to avoid specific things that we do not want to have into our portfolio. Now, when it comes to company analysis and quality, right? So I'm sure everybody knows Warren Buffett. I'm not sure if everyone knows Benjamin Graham, but Benjamin Graham was basically Warren Buffett's teacher. And they're both kind of against speculating, right? And when you are investing and you're owning a part of a business, you're owning it because you believe in that business and where that business is going. Not to be very speculative in doing your investment, right? So you're looking at the financial strength of a company, trying to minimize your downside risk. You want to have that margin of safety, and we take all of that into consideration. So our philosophy is more lean towards that value investing side, right? You want to own a business. So when you are investing in a company, a lot of people look at investing in the stock market as, oh, it's risky, right? Risk in that sense is the risk of losing your money, right? Risk is actually a measure of volatility. And volatility is how high and low is your portfolio actually swinging, right? From up to down, up to down, up to down. And it's very hard to time when you're actually entering and exiting a market or a specific security. So it's always important that you're actually holding a company that you think the price you're paying for it is valuable enough for you to hold that company. So think of value investing as, let's say you have some really strong companies, right? Like let's say Microsoft, for example. If they have 1,000 branches around the country and they were willing to tell you, you know what, there's an opportunity, you can afford it, you can hold and own this branch. A company like that, I'm sure many of us would want to own that branch, right? You're going to be an owner of that branch, all the cash flow that branch generates, the benefits of that branch, that company, you're going to benefit from that because you're owning that company, right? Tomorrow, if the price of that branch goes down by $10 or up by $10, it's not going to affect you because you're looking at what's the value I'm receiving for all the future cash flow this company is going to generate for me, right? All the earnings. And that's how you want to look at value investing. When you're actually investing in the stock market, we're buying a company. We're looking at, okay, is this a company I actually want to own? Tomorrow, if there's no stock market, where you're holding shares of this company, do you want to continue being an owner of this company, right? And that's the question we ask as well. So you want to be holding high quality companies in your portfolio. And how we do this and go through is we have an investment committee, right, or portfolio managers that we look at what opportunities are available at all times in the market. And that includes a lot of fundamental analysis, like looking at the company, the business, the statements, the cash flow statements, income statements, balance sheet. How strong is the company, right? Is it valued correctly? Is it overvalued? Is it a good time to buy with regards to how much it's priced? And a good way of explaining that is, let's say we all know the price of milk is generally $5, right? Now, you go to the supermarket today and you're going to see the price of milk. Let's say you have some milk at home, but you're just going shopping and you see the price of milk is $9. You might not buy it today because it's $9 and it's generally $5. Next week, you go to the supermarket and now it's down to $4. You might actually buy 1 or 2 cartons of milk, right? Because you see the value in buying, it's the same milk, does the same thing for you. It's just at a better value, right? So it's important that when we're looking at value investing is trying to buy that business as an owner of that business at the right value, right? Sometimes what may seem like a company is overvalued may still not be overvalued. It may still be undervalued on the long-term basis, right? And we look at all of that. It's all about value versus perception, right? What you're seeing in the market on a daily basis is just people buying and selling that company. What you see today is not always the necessary long-term value of the company being reflected. It's just buying and selling, right? So sometimes, let's say COVID crash came and people started panic selling, right? It was a very quick 3 month, 3 to 6 month recovery in the market because when people were panic selling, that doesn't mean that was actually the value. The value was much higher. So what you're seeing in the market, volatility, this is all perception and kind of just people supply and demand on a daily basis. People buying, people selling, people buying, people selling, right? And there are things that impact that on long term, but that gives us opportunities. Without that, things cannot be overvalued and undervalued. So that is very important. Volatility is important for us to be able to find these opportunities. Now, keep in mind what I mentioned. Risk is a measure of volatility in many sense, right? It's about the swings in a portfolio. So someone who's aggressive may have higher swings in their portfolio. Someone who's conservative may not have higher swings in their portfolio. But one's more risky than the other in the sense of volatility, not necessarily the chance of losing your entire portfolio. I'm sure you may have questions with regards to that, so do send them into the text box and we'll try to get them. I mean that pretty much wraps it up for today. We will open up the floor for questions to anyone who does have any questions, and we'll go from there.
Yeah, Zishan, thank you for all that. It's really helpful when kind of understanding the markets and the actual reasoning behind investing. Just to give you a quick recap, I know this was relatively short, but no more transaction fees for any of our clients, which is some phenomenal news. And alhamdulillah, we are now offering financial planning again, which Zishan stressed, is the most important part of planning towards retirement or whatever those goals may be. So again, any questions or concerns, our contact information is here. I'm personally based in Vancouver. Zishan is based in the GTA area in Ontario. And if you have any other questions, feel free to leave them in the chat box as well, and we'd be happy to get to them.
I say we've spoken a lot. I'm sure there are questions. We can't have been that good at the presentation to answer everything. I mean, if any of you do, sometimes the questions don't come up at the moment. So yeah, if you do have questions that you want to ask even later on, feel free to just send us an email. Both of our contact information is there. Yeah, absolutely feel free to reach out at any time and we'll set up some time to discuss with you one-on-one with regards to any questions or your situation. Yeah, thank you.
Yeah, I guess with that,
Comment.
again, yeah, if you have any further, yes, it is over. Okay. No, I'm glad you enjoyed the presentation, and I know that was a lot of information in a short period of time. And yeah, please, take the time to digest it and kind of understand. Again, I'm sure questions will come up during that period, so feel free to reach out, and we'd be happy to have a consultation or just a quick phone call. There's no fee for that either, just for reference. But yeah, with that, thank you so much for joining us. Again, we hope you found it informative. And we're really excited about a couple initiatives that are taking place. And if you have again further questions, you can reach out to us directly. It looks like there's another one. And yeah, there's more information on our website at ShariaPortfolio.ca. Feel free to follow us on social media, Instagram, Facebook, LinkedIn, where we're posting there frequently. And yeah, we look forward to inshallah speaking with you soon. So take care and enjoy the rest of your evening or day or afternoon, whatever it is in your time zone.
Thank you,
Take
everyone.
care.